Hey everybody, welcome to the Daily Talk right here. This is Gregory, your host for today and every time we get on the show. And you know how much I enjoy talking with you. I look forward to the show this morning just to chill out for a minute. And you know, housekeeping comes first as always. So if you don't mind, if you could hit that like, subscribe, and the bell notification, you know we would appreciate it because we'd like to grow our audience. That's the purpose, is to get the message out to as many people as possible, and you play a major part of that, right? Most definitely. So this morning, I just thought I would talk about the feelings in general, some of the things that I'm running into as I speak to individuals today, right? A lot of confusion about what's actually happening in the market, a lot of fear. People are unsure of what's happening out here in terms of interest rates, appreciation, inflation, all of those things. What should I do right now with my house? Well, I put out a post on LinkedIn, if you were to look for it. I don't remember the exact name of that, what I named that post, but it had to do with hunkering down in this market because, you know, when things are happening, that's always an option. Yes, you don't want to feel like you're being left behind when it comes to taking advantage of the equity, and you feel like you're unsure, do you want to sell your home because you might not be able to find another home? All of those thoughts are real. They come in, they flood in, and when you hear of other people prospering and making great choices and getting the benefits of that, sometimes it can play on you and make you feel like you have to make a move. Well, the reality is you have to do what makes you, or you don't have to do this, but I think the most important thing is doing what makes you comfortable, number one, doing what's best for you and your family, number two, and then doing something that you won't have remorse for, number three. There's always buyer's remorse, there's always seller's remorse, or that post-traumatic syndrome that sets in sometimes after a big decision. Well, selling a home for hundreds of thousands of dollars and sometimes millions of dollars, that's one of those situations that can give you a little afterthought, right? So what should you do? What are your options, I think, is a better way to put that. What is one of your best alternatives that does exist out there? Well, you'll find that depending on which lender that you're dealing with or which mortgage broker that you're dealing with, there are still programs out there with lenders and mortgage companies that are still behind the curve, so to speak, when it comes to raising their rates. Many of them wanted to see what the rest of the market was going to do before they adjusted their rates so as not to lose business, but actually be the company that's kind of left behind that's still drawing business because their percentage and their interest rates are lower than everyone else. I'll give you a quick example because this shouldn't take very long. If you own a home in Nevada, about the January of 2022, actually the fourth quarter of 2020, the average equity in homes in Nevada were $175,000. Of course, this was over $300,000 homes, $350,000, $400,000, but $175,000 was on average. Many homes are seeing $200,000, $250,000, and $300,000 increases since COVID-19 and the appreciation started. So what's the best way to take advantage of that? Well, you want to do something that, one, is hopefully going to allow you to derive the interest benefits from whatever you do, right? Because you always want to affect your bottom line and your tax shelter before anything else, if possible, and then everything else is secondary and third. So a HELOC loan comes to mind. There's a couple of them out there, a couple different types. A normal HELOC home on average will be a 10-year draw period and a 10-year payback period, right? So there are loans out there with 10-year draw periods and 20-year payback periods. It depends on the company and the program that they're offering. Now, another great thing about a HELOC right now in this particular market is many people want to get things done. If they're not going to move, they would rather stay in their house and get things done in their house. No, maybe that's you. Maybe you have a house with great bones. There's absolutely nothing wrong with the location. Maybe you have children that are in school, and a move is going to interrupt quite a few phases of your life, not just the fact that you're moving. Well, if you have a home with great bones and it needs a paint job inside, maybe new flooring, the bathrooms may need to be remodeled. You might even want to do some landscaping. Or you may just want to do a wholesale remodel. Well, today, about $90,000, $60,000 to $90,000 will handle a full-scale remodel. But where do you get $60,000 to $90,000? Well, a HELOC is a great place to look. Prior to let's see, this is September, so I would say right around August. Prior to August, you could find HELOCs with a start rate of about 5%, right? 4.5%. In some cases, they were in the 4% range, right? And that's 4% for 10 years on a loan of 110,000, 130,000, right? So when you look at $130,000 at a 6% interest rate, there's no way in the world you're going to find a credit card that's going to allow you to do that. And the nice thing about a HELOC is it's similar to revolving credit. You get the right program and you can pay that money back as you go, and you can redraw those funds for the full 10 years. Now, after the 10 years, either you pay the loan off in full or you start a payback period that doesn't fluctuate, right? You start a payback period, and when that payback period, you cannot make draws. That's the only difference, right? So the goal with a HELOC is to use the money, pay it off, and then use it as a floating line of credit. That is much better than a credit card. And in some cases, it's actually a write-off at the end of the year that will help you reduce your taxable income. So these are things that you need to talk about with your tax advisor, tax person, or CPA so that they can give you the benefits to you for a HELOC, but you don't always have to move. And that's the way you hunker down in this system or in this particular circumstance of this market and use the funds that you need, and you have enough time to wait for the interest rates to see what they're going to do. And then if you do decide to sell later and the interest rates are appealing, now you can sell your home, pay off your HELOC, move into your next home, and then you've done things in a way that has made you comfortable from start to finish. So that's just one idea of hunkering down and another way to approach this market right now that maybe you didn't know about, but it is available to you. Now, something else I want to mention about HELOCs. Most of them are variable. Most HELOCs are variable. So you need to have enough cushion in the payback fund for your HELOC that if the rates do fluctuate, you know that you have enough room to take on that payment if it should fluctuate, right? Another thing is there are fixed rate HELOCs. They're very hard to find. There was only one that I found in the United States. I mean, of course, I didn't look in all 50 states, but I called quite a few of the states looking for a program with a fixed rate. The only one I found was in California, and it is Patelco Credit Union. Patelco Credit Union was offering a 3.8% HELOC fixed for 10 years with a 10-year payback period, right? So that's unheard of, especially in this market, especially in California where there's so much equity. That is one of the most fantastic deals that I had ever seen. So I did post that so that individuals had an opportunity to take advantage of that. I am from California originally, so of course I wanted to help Californians, right? But if you can find a fixed rate HELOC, by all means. Now you want to watch for the HELOCs that offer you a fixed rate for a particular period of time. They'll say that it's a fixed rate HELOC, but in reality, it's fixed for 3 years, and then the interest rate adjust after that to something different than what you had up front. So you want to make sure of that before you take on one like that. A couple of the major banks offer that. So I would say, of course, do what fits your circumstances if you want to look at a bank, but brokerages and lenders with several programs oftentimes can offer something that will fit what you're looking for. Just be careful when it comes to something that fluctuates within the time period. Either it's going to be variable for the 10 and you know where you're going to start and possibly finish based on the index and what we can see happening in the market, or it's going to be fixed from the start and you know it's going to be fixed throughout. And if not, whatever that adjusted rate is going to be following that fixed period, you want to make sure it fits what you're doing and that it's not going to hurt you. So a HELOC, look into it. Take advantage of it. That's it for today. This is Gregory, just a daily talk. Nice to catch up with you. See you in the next video.